So, are we about to experience market crash 2.0 this summer of 2023? I say 2.0 because there has been a correction in the housing market since that Liz Truss mini budget fiasco. If you look at the news articles like these two here with Sky and BBC this week, what we're going to see is that they are using data to try and create some fear-mongering media. But is it factual? Is it real information, and is the tone of the story correct? I'm going to debunk it, break it down, and potentially agree with them in some context or not, as the case may be. In this video, we're going to talk about what are they actually breaking down statistically, and where is the source, where is it actually coming from? We're going to look at some of the market stats in terms of what's been going on 21 weeks into 2023, from listings and from gross sales perspective. We'll also look, is the remortgages up? Or are new mortgages up? Which one is falling, which one is declining? They normally seesaw. We're going to have a little bit of a look into mortgage rates. I've got the data this week from a mortgage broker giving the best rates on 90% products. And I'm going to talk about exactly the difference and what that's going to cost for a £300,000 average house with a 10% deposit. Is there a big difference on the current mortgage rate to the ones that have, let's say, increased drastically this week? And I'm going to go to the level of looking at a 7% mortgage as well. How does that actually sit on a 300 grand purchase with a 10% deposit? If we saw the worst case scenario and 7% mortgages were only available, what is the actual difference that that's going to cost someone? So let's get stuck in straight away. Let's start with Sky. So Sky News, I think, were the first to report this 14-year worst case cycle in average house prices. And what they're reporting from the source of Nationwide Building Society is that actually prices from May 2023 to May 2022 have fallen by 3.4%. They don't actually say whether that's mortgage values, completions, new mortgages agreed, or asking prices. But we're just going to take that round stat and say, yes, that does sound very bad. In reality, it's actually worse than that. And what we've seen definitely across the south of England for avocado property is we've seen somewhere between corrections on asking prices of about 10 to 12%. But really this stopped around the Easter holidays. So as soon as the kids have gone back to school, we've seen the market actually be what I would call normal and stable. And that's been because interest rates have just been declining every single month since December of last year. And we've seen some okay rates in perspective of what people were anticipating, these crazy 6.5% rates that they thought we'd be at this point in the year. They're more like 4.5%, so 2% better than what we were expecting. What we've also seen is an influx of first-time buyers. First-time buyers have dominated the market. They're taking on about 40% of every transaction that goes through at the moment, and that is because rents have gone so high. There's such a shortage of rents, drastic amounts of landlords selling rental properties at the moment, and the plus 65 age bracket of landlords that have reached that kind of retirement window in their life are now starting to sell those assets that they've owned for many years because equity has been so high. And the reality is what we've seen in asking price, average asking price from 2020 all the way through to about now, is we're still seeing a plus 20% growth over the course of less than 3 years, which is huge. So in context, these bad stories are factually correct, but when you look at things on a wider landscape, actually the property market is nowhere near the picture that's being painted. And we're going to get stuck into that as well in this video. So first-time buyers are dominating the market, plus 55 age bracket, and not only selling their investment portfolios, but they're also planning to move, relocate, downsize, whatever it may be. Surveys showing that in 2024, we've got an anticipated 10% of everyone that's over 55 are looking to move house. And that, alongside a lot of the other buoyant parts of the market, is seeing that listings are up. So I'll share this statistic with you. As you can see there, that 2023, by week 20, 37,000 new listings had hit the market. Now, if we look at that in comparison to last year, we're up 2,000. If we look at it in comparison to the year before, 3,000. We obviously had the lockdown moment where everything dropped down drastically. We're still in comparison to 2019, a little bit down on 2018 and way up on 2017. So properties are coming to the market. Is the demand there is the key question. Absolutely. If you look at the statistics in terms of what's been selling, we're seeing way more properties sell than we were expecting at solid price, as long as people are realistic with where they market at. But the truth is, when you look at the actual sales in terms of volume and numbers, they're not as high as what they have been for the last couple of years. In fact, there's only 2020 when gross sales, or net sales I should say, 20 weeks into a year, have been as low as where they are. So the last 2 years, 2021 and 2022, have seen over 500,000 sales by week 20, and last year over 400. We're now sat at 338. Not crazy numbers difference, but a significant amount to use some media articles. What I really want to get stuck into now is what's going on with the mortgage rates. So how is this going to impact the average buyer out there? Well, as it stands at the moment, if you were looking to get, as the statistic shows here, if you were looking to get a 90% loan to value mortgage with a 10% deposit on a 5-year fixed, the best deal a month ago was 4.34%. As it stands this week, a lot of banks and lenders have pulled the plug on a few products, and most of them have hiked their interest rates up. And if you again look at the news articles, what you will see is drastic hikes, mortgage lenders pull rates, blah, 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 blah. Market crash 2.0 this summer potentially. What it actually means is that the best rate at the moment is 4.51, whereas if we went back a month ago, it was down at 4.34. So what does that mean? Well, I've slapped it into the calculator to give you a really good understanding. So if you're getting a mortgage amount of 270,000, 90% loan to value as we spoke about, well, a month ago, that would have cost you on a full monthly payment over 30-year term, which most people are looking at doing at the moment, £1,342.50. This big drastic increase on mortgage rates, it's now going to cost you a big whopping, what's that, less than 25 quid more. So £1,369 for that incremental change on the fixed rate. But what's more interesting, because it's not a big number there, what's more interesting is what would happen if that rose to 7%. Well, here's the stat. If we had a 7% interest rate on exactly the same term, and the rate just being the one different measure, that would see your monthly payments, full monthly payments, up as high as £17.96. So just over £400 increase. The question I've got for people, is that going to stop buyers? Is it going to stop people buying? Is it going to stop first-time buyers? Is it going to stop tenants that want to get out of the rental cycle buying? Is it going to stop death? Is it going to stop divorce? Is it going to stop children? The answer is no. So will the average prices change if it was to go to 7%? Quite possibly we will see market correction. We will see prices start to reduce because of the affordability has to be accountable. But will £400 a month change the amount of people looking to purchase? Will it change the reasons why people will be buying? In average and in the main, no, I don't believe so. We were expecting to see transactions be significantly down this year and next year and the following year because of the stamp duty holiday. Let's not forget, the stamp duty holiday moved a lot of people's plans to move home forward significantly by 2 or 3 years. So we should see transactions lower as the fallout of that void of almost a bubble that was created. Will average house prices drop this year? Quite possibly. Are they stable as it stands at the moment? Most definitely. Are properties coming to the market at a higher volume, which is what we needed because there's a huge shortage of stock still for buyer demand? Yes, they're coming forward in better numbers. We could still do with more, I think, on the market. Are we seeing less price reductions on the average property in the month of May comparison to the month of February, just a few months prior? Significantly different. And is the rate in which properties are agreeing sales now up in comparison to where they were in February or December or November? Absolutely, we're seeing more properties sell. So will we see market crash 2.0 this summer? It remains to be seen what happens with the next base rate increase. But as it stands at the moment, the hike in mortgage rates is not as significant as maybe what it's laid out to be. and I don't think it's going to have an impact with these first-time buyers, people looking to move out of rented, and the upsizers that are now looking at the school window and looking at where their property is going to be, where they're going to lie their head for the next 10 years. I don't think it's going to see a drastic change, and I think we will probably see prices stay stable for the remainder of this year. If anything, a little percentage drop in the context of things wouldn't be too much of a problem, but my gut feeling tells us we might even see by the end of this year, the last 6 months of 2023, a slight increase on average house prices in the UK.